Hi, it's July 15th, 2010. I'm the webmaster here at etfobsession.com. I've got an interesting new game for you, or perhaps for your children, to learn about the behavior of various asset classes over long periods of time. So if you can follow me to etfobsession.com, which of course is a great site for analyzing large popular ETFs, if you just want to click on the Asset Conquest link here, it'll bring up our new game. So Asset Conquest is a game that helps people figure out the long-term behavior of four major asset classes: collectibles such as fancy clothes, watches, and luxury cars; bonds, which of course are public debt or corporate debt, which makes interest payments to you periodically; real estate. Real estate has a down payment, which you can think of as an investment cost. And it has annual income and expenses. Expenses mainly being debt service and repairs, and income being rentals. And then finally, stock. And stock, as we all know, has a cost per share, a certain unit cost, and an annual income, which most of us commonly know as dividends. So here's how it works. You have 10 years to become as wealthy as possible, as measured by your net worth. You start out with $10,000 in cash and a salary right here of $1,000. And that'll go up by a few percent a year, as it does in the real world. And then, if you'll see, you have four asset classes: collectibles, bonds, real estate, and stock. And then we total them up at the bottom. And for collectibles, you have a certain value. How much is that fancy car you have in your driveway, plus the diamond rings you own and your stamp collection, all that. That's the total value. And the annual expense is what it costs to maintain all this. Well, it costs much to maintain a fancy pocket watch, but it costs an awful lot of money to maintain a sports car. So as you go through the game and you buy some collectibles, you'll see this going up. Now for bonds, it's the same thing. What's the market value of all the bonds you own? And how much interest do all your bonds pay in aggregate every year? For your real estate, what's the net value of all the real estate? And implicitly behind the scenes, we're assuming that you have some loans on the real estate you own. So you'll notice that the home prices are much lower than they would normally be in the real world. This is because they only really reflect the down payment. But be advised, when you invest in real estate normally, you usually take on some debt, which could mean you could lose more than you've invested. And so anyway, there's annual income associated with real estate, which of course relates to rent, and to occasionally property easements. And then an annual expense, which takes into account basically the loan principal and interest you have every month, plus maintenance and repair expenses. And then we have stock finally, and here's the total value of all your stock at market value, and the annual income, which we typically call dividends. And then we simply total all these columns. Your total value right now is $10,000, because that's what you got in cash to begin. Your annual income is $1,000. That's all coming from your salary, and you have no annual expenses. But we want to get rich here. So there's a bunch of actions that we can take. We can buy collectible units. I'll explain what these are in a second. Bond units, real estate units, or stock units. Collectible units would be sports cars. Maybe you want one. Maybe you want a fleet of them. And every time you buy one, you got to pay a 7% transaction fee on top of the purchase price. Similarly, you can buy bonds for a 1% transaction fee, real estate for a 6% transaction fee, and this could be like you could buy 10 condos at a time if you like, or you can buy stock, which also has a 1% transaction fee. Now, in case you get tight on cash, you can sell assets in any of these four asset classes with no transaction fee. And in real life, of course, both buying and selling has a transaction fee, but in this case, we only assess it on the buy side. That way, when you look at your financial statement above, you'll know what your assets are really worth net of transaction costs. Finally, when you're done with all your transactions, you can just click Go to Next Year. But let's take an example. So if we look up here at the top, when we first get into Asset Conquest, we've got a bunch of opportunities, and each opportunity is highlighted by a prospectus. The prospectus, as in the stock world, tells you about the company or the investment that you're about to make, and you can assess whether or not you think it's a good investment. So, collectibles, let's see here. In an effort to clear outdated inventory, Regent Sea Yachts is offering a 30% discount on their older models. Wow, I can get a cheap yacht. You can now acquire the yacht of your dreams, or a few for investment, featuring onboard kitchen, dining room, office, master bedroom, and engine room. Why not sail away with your dreams? Boy, that sounds fun. And it's only $7,140. and it just costs me $1,553 a year to maintain. Boy, that sounds like fun. I think I'm going to buy that. Now remember, I have to account for an extra, 7% if I'm going to buy a collectibles unit. So let's just say $9,000. I got $10,000 in cash. I could use a yacht. So I'm going to put $9,000 in the amount, including the transaction fee here. And I'm going to click Do It. Now let's see if I'm able to buy that. Oh, transaction receipt. What do you know? Here's my receipt. It says you bought one collectible unit for a total cost of $7,640, including a transaction fee of $500. Your annual expense for this asset class has increased by $1,553. And in fact, since I didn't have anything before, my annual expenses for collectibles are now $1,553. And the value of my collectibles are $7,140. Of course, the transaction fee is just lost money. Okay, we've got $2,360 left. We could save some cash in the bank. That might be a good idea. But I think I'm going to buy some real estate. It says here, Wesson Dunes is a new subdivision next to the prestigious Palm Hills Country Club. It was sold out last year and is very well maintained. Now, a major investment company is selling all of its tenanted homes. They need the capital quickly in order to finance a new project, so they're offering you access to this premium neighborhood for cheap. I can buy a place for $1,946 down, which will give me $590 in annual income and cost us $418 in annual expenses. Wow, that's profitable. I think I'll buy that. I've got $2,360 left. Let's just say click Buy Real Estate Units, including commission. I don't know, it might be about $2,100. Do it. Got a new transaction receipt here. You bought one real estate unit for a total cost of $2,063, including a transaction fee of $117. Your annual income for this asset class has increased by $590, and your annual expense has increased by $418. Indeed, we can see it there. Okay, that's about all I want to do right now. So this was my statement for year 0. Let's get my statement for year 1. Okay, go to next year. Do it. Uh-oh. You can't progress to next year because you won't have enough cash to meet your expenses, even after accounting for salary and income. You need to liquidate some of your assets in order to raise cash. If you can't get past this problem, then consider yourself bankrupt. Already? Okay, tell you what. I'm going to get rid of the yacht. I don't need this $7,140 yacht. Sell collectible assets to raise cash. 7140. And I guess we lost the transaction fee on that one, but that's life. And I have another receipt. It says I sold $7,140 worth of collectible assets, which has increased your cash position by an equal amount. Note that annual income and or expense for this asset class has been proportionately reduced. And indeed, I no longer have collectibles expenses. My cash has gone up to over $7,000. And now I'm ready to go to next year because I'm solvent again. Click Go to Next Year and do it. Okay. Here we are at year 1, your financial statement for year 1. And we have more opportunities that we can explore. But at the top of the page, we also have investment news. It's telling us how each of our asset classes performed. And over the long term, by the way, these classes are designed to perform pretty much as they do in the real world. Nothing is a perfect predictor, but you'll notice, for instance, that bonds tend to grow or shrink at a kind of tepid rate. And after inflation, they really don't grow much at all. Whereas stock and real estate tend to grow faster, but stock in particular can suffer very sharp downtrends within a short period of time. In collectibles, well, let's just say they may look nicer than they actually perform as investments. So anyway, you can continue to monitor your investments every year through the news that comes up, and you can continue to invest, and eventually, after 10 years, you'll get a statement at the top of the page indicating your final score, which is the total value, that is the total value of all of your assets. Good luck and happy investing.